Welcome to the Kendall Report. I want to thank everyone that came to the live stream yesterday. There was a lot of information covered there, so make sure you go back and watch those sections. We have them all marked up, what I was talking about at different points in time during the 2.5-hour podcast, but I definitely would suggest you go back through that. Tonight I'm just going to do a quick review, and we had one crazy day to say the least. Let's go ahead and get into tonight's video. As we look back on yesterday, the S&P was down 2.1%, NASDAQ down 2.7%, and the Russell down 3.3%. It was an ugly day to say the least. We took out a lot of major support numbers. In last night's video, I talked about the support numbers around the 4086 on the S&P. That was taken out. We traded all the way down on the S&P futures down to the 4060 level. I'll cover all the details here in just a few minutes in the technical section. As we dig into yesterday's action, we know it was triggered by the big CPI number that came in year over year at 4.2%, up 0.8 when probably the highest expectation, maybe 0.3 month to month, 0.4, we came in at 0.8. So it came in really hot. And I discussed this in detail on the live stream yesterday, but I want to mention it again. What happened last month, the PPI came in much hotter than the CPI. And the PPI has a leading and lagging effect on the CPI. So we saw a big increase in producer prices last month. That equated into an increase in the CPI for this month. So today's PPI is going to be really important. The expectations is for a 0.4 increase, but if that comes in hotter, that will tell you that we'll see even bigger numbers possibly for next month on the CPI. If they come in less than expected, then maybe there'll be a cooling off, and that will take away some of the inflation fears that we saw yesterday. But the market was relentless yesterday as we went through the session. There was nothing that even looked like a bounce. There was so much volatility. We'd see about a 15 handle. A couple of times we got a 20 handle rally, and then it fell back and made new lows, just kept pushing into new lows into the last 20 minutes of the day. Finally, we saw some reprieve, but not very much. Overnight, we're seeing a bit of a bid in the market, so they're starting to come back from that standpoint, but nothing really big. You know you're in trouble when a 15 and 16 handle rally in the S&P feels really good after almost a 100-point drop yesterday. As we break down even further, there was 10 of the 11 sectors were actually down. The only sector that was up was energy, and that was interesting just because of the pipeline issue that's going on, and now that's been corrected. So I hear that they are turning the pipeline back on. It's going to take 2 to 4 days to get it back fully as it was before. The other thing that we have coming out tomorrow is the claims number, expected to come in at 490,000. That's well below, almost 300,000 below where it was about 8 weeks ago. The continuing claims came in at 3.69 last month. I'm still looking for a number under 3.2 to be material. I don't think we're going to see this. And as I mentioned after the employment numbers out last Friday, I think we may have already hit the wall on these jobs numbers, and we're going to see possibly more increases than what are expected tomorrow. So that could actually put some further pressure on the markets if we see those numbers come in as well, and especially if we get a hot PPI number. While we're going through all that, we still have plenty of earnings coming out. We also on Friday have retail sales coming out, and that's going to be a big number that markets are going to be a little fearful as we come into that number as well. So there's a lot to digest over the next couple of days. But as we come into Thursday, we're likely to see some recovery. We'll find out if it can hold. I don't have any high expectations about a big reversal rally. It's certainly possible, but it doesn't look like from a momentum standpoint there's a lot of upside right now, and the markets are definitely broken. The last mention, and I'll go through all the details here in a minute, we did have a substantial amount of selling coming in. In fact, we had over 5,800 sell signals, dropping the percent bullish well below that 42% number that I always talk about. So let's go ahead and take a look at the charts and see what they're telling us for Thursday. As I review the WaveTech database, we had a substantial amount of selling come in. There were 5,861 sell signals, only 135 buy signals. Over the last two sessions, we've seen 9,059 sell signals. That's a lot of trends to be broken. Just 3 days ago, we got a short signal on the futures, and since then, it's just been huge carnage as this market just failed right at that last all-time new high that we made just 4 sessions ago. As we come into today, there's going to be a tremendous amount of sell orders coming in the morning. So this will be substantial as a lot of squaring up of positions are going to happen. We're likely to see the market struggle to get back up. Now, we moved from 45+% bullish yesterday to 28.65. The next number in play now is 22%. So if we get below 22%, the market will go into a full liquidation mode and continue to go on. I just want to talk for a second about what it means when we get this type of buy orders or in this case sell orders. What it means is that a lot of the short-term trends have been broken. Now, some of these stocks will bounce back after getting a sell, but most of them will be in a neutral position anywhere from 14 to about 21 days. So we get into this flat period or very choppy period. So if the markets do hold support, we're going to see some grinding back. Otherwise, if we continue to see further declines and internal deterioration from a trend standpoint, then we are likely to see prices move even lower. And I'll talk about that in the technicals in the next section. The overall viewpoint at the moment is that the market went from a 60% bullish just about 5-6 sessions ago to a 28% bullish, which is more of a neutral range. Under 22 is an extreme negative range, which suggests the full liquidation, as I mentioned just a minute ago. As I review the S&P futures, I mentioned that 4,400 projection the other night. This was issued on 5/7. The target was issued back on 4/26. On 5 is the last session that it was valid. The reversal day that we got negated the upward reversal, so 4,400 from a pattern viewpoint is out of play. You'll see we got a sell short signal. I mentioned that a couple sessions ago. We also have the outside 3-bar trade going on. So today, based on that pattern, if we can't get back above some numbers I'll talk about here in a minute on the grid, then you can take profits today. This would be the third session. This is why it's called a 3-day trade. But if we did take out yesterday's low, you could carry that trade into Friday morning and you would just be covering that on the open. But for now, no problem with taking profits here on this market if we retest yesterday's low. The other thing to notice is that the PPMs were all turning up just a few days ago. On May 10th, the PPMs were all turning up. All of a sudden, they rolled over. You can see the acceleration that we're seeing right now. The PPM1 is now at a minus 0.32, which is trend mode. This tells you that there's major resistance above the markets at the 10-period moving average. The other thing that happened yesterday is we did get an STX buy signal. STX was 40.83. We closed at 40.58. We are seeing some moderate upside. It was up about 15, 16 plus handles earlier in the overnight session. We're now up 9 handles on a session as folks are a little cautious as we come into the PPI number. I don't expect to see any big bets put on before that. Depending on how that number comes out, as I mentioned earlier, is what type of reaction we're going to see. But there's going to be substantial resistance at the 40.84 number. That was support yesterday. It's now resistance. And if we do get above that, as we look at the market grid for today, S1 is 40.39, R1 40.78. That would put us, R1 is 40.78. We could rebound back to 4,100. There was a lot of intraday resistance between 40.90 and 41. 106 yesterday. We saw a lot of reversals kind of coming intraday early on in the session once it started to break down. So that is going to be still major resistance at that point. As I review the SPX, it actually closed under its 40-period moving average. You can see all the PPMs are accelerating to the downside. PPM1 minus 0.28. PPM2 is not accelerated into trend mode yet, but that's likely to happen over the next 2 sessions if we remain under that 40-period moving average. The major resistance and the cluster of numbers is at 41.75, but that's now over 100 handles higher, so I don't see that being in play. Most likely won't come into play until next week, and those averages are going to continue to accelerate to the downside. Next market I'll cover is the NASDAQ. NASDAQ obviously had a huge decline as well. The STX number 13,017 for yesterday. We did close below it at 12,998. So we have an STX buy signal. That usually suggests that we'll get to an R1, R2, which would be 13,089, 13,190. Overnight, we've already seen a 13,069, so almost an R1 print. I do expect to see more volatility, so it's likely there could be a potential for an S1, R2 number. We may have seen the worst of it, but there could be a retest of yesterday's low. My expectation, if we did make a new low, that we would reverse. One of the positives that's happened here, the PPMs are in a substantial downward trend. They're down 0.66, 0.25 positive on the PPM3. There is a little bit of a bias for the upside, but like I said, it most likely would be an R3 would be about as big as we could get tomorrow. I would expect R2 will be the high of the session. The final market that I'll cover is gold. As I mentioned in yesterday's comments and on the live stream yesterday, the 1817 to 1810 should be substantial support there. We could go down into the 1700 handle, but we're seeing the 10-period moving average come into this action 1808.30. Last trade is 1819 with a low of 1813. So we traded down between the S1, S2 number, the high R1 1828, the high 1822. So that's probably going to be roughly what we've seen today. What we've seen overnight will continue. An S2, R1. I don't see us getting above R1, but with that 10-period moving average there, with an upward slope of a 0.28, there is only a 30% probability for the market to close below 1808 today. This will complete the video for tonight. Thanks for watching. We'll talk to you tomorrow night. Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/WaveTech. Sign up for our software. You get Market Grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much.